Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, as we can see, Bitcoin on the 4-hour, we did lose this support area. Had a little bit of a pump first, and then we dropped below it. But yeah, we lost that support area even. We lost this support area that we drew in yesterday morning. So we are now looking to, well, we are in relative no man's land within this little small area price action. We do have this obviously support here, and then we do have these kind of intermediate recent lows that we've got. So maybe we don't make it down to this support towards the 20,000. Maybe we do trade back up. Maybe we then get rejected by the old support as new resistance and then actually come down to 20k. But yeah, as you can see, we are obviously in a bit of a downward trend now. Within obviously the normal oscillation of price action, we can see the move up, the move down, the move up, the move down, obviously with a pretty much a high, a ever so slightly higher low, and then obviously a higher high, and then looking to put in a higher low here to try and move upwards. Obviously that will all be thrown back by the wayside if we do basically break below and hold below 19,500. We'll kind of lose the structure, and we will then be looking for moves down. Well, obviously firstly back to our recent lows, and then just see if we get continuation over time below there. I think we are just in a bit of a holding pattern until we get some of these important news, these data points that are coming this week, and then assess the market reaction of those data points. So if you want to look at the S&P, you can kind of see that is just trading relatively sideways under this support, under this resistance area though. So it is primed. If any of the news is digested positively, it is primed for a pretty decent move to the upside if it basically breaks above this this resistance. So there is that. DXY having a little bit of a pullback as well, a little bit of a slight reversion to the recent mean. Probably again just waiting to see the reaction. 10-year though is still basically at its relative recent lows, not getting much of a pullback in that. A pullback obviously back to the upside in the yield. But yeah, this is this, if like we did say before, if we lose this, we are looking at heading towards sub 2% yields again. The whole inflation worries might start to go away for a bit. And obviously if you guys have been watching a lot of macro economists out there, there's quite a few good ones out there. They are kind of they've all kind of, the consensus has moved away from us obviously been in a similar to the 70s environment to moving towards to a similar to the 40s environment. And what did happen in that environment was we did get a high inflation, but it was punctuated with actual periods of deflation. So we could very much had this initial high inflation, we then swing down to deflation before then going back to inflation again. It is a pretty tough environment globally, geopolitically. Things are getting, the pie is basically getting smaller, so to speak. So people are starting to fight over things. Obviously once the pie is getting bigger, people don't seem to squabble as much, but obviously it is struggling. We are entering what appears to be an era of deglobalization, as in a decentralization, a fragmentation of basically how things are made, and that is in itself massively deflationary, massively inflationary, because it will just mean higher prices, but it is better for the actual workers. So wages in that scenario would almost certainly rise a lot quicker than the actual inflation, because you need all those workers to make all those things when you're onshore. So structurally, obviously, we could be losing one of the main sources of deflation, but however, debt and demographics are still against us. So yeah, I mean, there's that obviously to think about as well. Oil are having a little bit of a bounce off this support area, still looking like it wants to take this out. It is similar to the 10-year chart, and yet it is an inflection point, like we've said. Oil breaking below here, 10-year breaking below its support level, and if stocks break up above this level, then we will be in all systems go. Then we will have looked like we are put in a bottom for the time being. Not to say we're going to put in a new all-time high, but it will look like we can make significant moves up towards the mid 4,000s for the S&P. Ethereum Satoshi parent easing off slightly, but nothing major. It is below the support area, but I mean, in the context of how far it's moved, this is not still not a bad looking a bad looking pullback. And if we basically do turn back up at some point, we could start to paint what would look like quite a nice ascending triangle bull flag for what would be a leg up to a very nice high on this ratio. Obviously the dollar pairing coming down with Bitcoin, as we can see here. So yeah, this sideways here didn't play out as a bull flag, did break down, but again, we are just looking at, I mean, realistically, as long as we're above this level, even if we do come all the way down and back test it and then bounce off that would not be the worst thing. However, we clearly have got basically a level levels roughly below where we are now. So again, if we do see some positive news this week, we could see a bounce from roughly where we are now in Ethereum also, I mean, I guess as well as Bitcoin, and then yeah, continue onwards and upwards. But yeah, obviously in the midst of a bit of a pullback, we did obviously have the signals of it. If we go to the stochastics, we were looking at this 10-12 hour and daily, 10 hours still coming down, daily 12 hours still coming down, daily turning down from a somewhat high level. Maybe we do come down a bit further, and we sort of put in a higher low relative to these lows, and then turn back up. But at the moment, obviously moving down with plenty of room to run. 2-day has switched over here. And then obviously all the ones that are looking better for the larger time frame, 3-day, 5-day, weekly, even bi-weekly, and well, not so much monthly, but again, that is quite a I mean, if you just look, there's not a lot of history of it. But yeah, so could we just see more downside? Yeah, we certainly could. Could we just see it down towards? Could we see it down towards this support area around 20k? Yeah. I mean, yeah, we certainly could. I mean, we are basically waiting this economic data, and like I said, we're waiting to see the market's reaction to it, because we are in an interesting period with lots of conflicting things. Obviously, good news being bad news being good news. Fed potentially, I mean, central banks potentially really buying bonds again, and potentially going to be buying them in a big way. So we are going to have an expansion of central bank balance sheets again, and yeah, I mean, we could be turning a corner. Maybe ultimately down the line we do get a bigger, badder crash in these markets, but like I said, we could have put in a temporary low around here. We have one of those substantial bear market rallies, and then we trade low after that. We'll have to see. But that is pretty much it. I mean, that would also, yeah, just whilst I mentioned that would tie into a kind of 1940s pattern, where we obviously then get a period of deflation. Obviously, markets can then rally a bit based off Fed easing, and then inflation comes back in a big way and we get slammed down lower. I mean, it would kind of tie into that narrative. So yeah, I mean, there's gonna be a lot of volatility, not even necessarily just daily volatility, but more volatility like monthly and yearly volatility than we're used to seeing. We could end up with cycles, in inverted commas, business cycles, but more just the inflation deflation cycles happening a lot quicker and a lot wilder. And yeah, it'd be lots of opportunities to trade in that environment. A lot more than normal. So yeah, there you go, guys. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.